Good morning. There's the opening bell, and welcome to Trading Futures, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I'm joined out there in the chat by my good friend Michael Fairborn, as usual, here on Tuesday mornings. Michael, a 20-plus year veteran of the financial markets. He's there to help us answer questions and to be your guide through the chat. Thank you to all of you who are joining us in the live version or the recorded version. Either way, be a part of the conversation. Leave a question or a comment in the description or in the comment section if you are watching the recorded version. And if you're in the live version, be a part of the conversation there and chat in to Michael, and I'll try to keep an eye on those chats as well. But as we get started here, it's kind of an interesting morning. This is an interesting week. There's a lot going on. The market's starting to move. The futures market's starting to move in a couple of different areas this morning. So let's take a look here really quickly as we pop over and take care of a couple of quick housekeeping items before we get into a couple of individual discussions. Remember that futures and futures options trading involves substantial risk. Not suitable for all investors. Make sure that you are aware of those characteristics. Make sure you read the risk disclosure statement for futures and options prior to considering any futures strategy. Also remember that futures trading requires separate trading authorization. It is not suitable for all investors. And that is something that you maybe want to pay attention to as you start to think about this idea of trading futures. Also, we're going to be looking potentially at some virtual currency futures here this morning. Remember that virtual currency derivatives trading involves unique and significant risks. Make sure that you're aware of that. Make sure that you read the NFA advisory on futures on virtual currencies, including Bitcoin, and you read the CFTC customer advisory on understanding the risk of virtual currency trading before considering any strategies on those two products. Also, remember that virtual currency is a digital representation of value that functions as a medium of exchange, a unit of account, or store of value, but doesn't have any legal tender status, at least not yet. So keep that in mind as you consider some of those virtual currency products. We're going to be using the thinkorswim desktop software platform here this morning, specifically the paperMoney version of that platform. Not a guarantee of future success, but a great way to practice and learn. There's some things that the paper trading account does not do that the live trading account will do, including studies and some of the functions of scanning. So just be aware of that as you move your practice from paper trading to live trading. There is difference in some of the functionality. Also, we're going to be using technical analysis today. Not the only way to look at the market. It's simply one way. It is theoretical. It is not guaranteed, but neither is any other method of looking at the market. And last thing I'm going to say here is that stop orders on futures behave a little bit differently than they do on equities. Stop orders are not guaranteed in execution due to exchange rules. Excuse me. The exchange will substitute an exchange-designated limit order for any order that submits a market order, and that order gets worked within a protection range, and there is the potential that that order may not get filled. So we'll talk about that as we get to some specific circumstances, but let's jump out here to the thinkorswim desktop software platform. And I happen to notice that there were a couple of areas that were starting to move right away. One of those are, gasoline in this particular case, coming into the middle of summer, starting to see a little bit of upward pressure here in this context. And that pressure may be in the longer term looking at a potential breakout of a resistance. This was a little bit stronger the last couple of candles here. So this chart, 5-day, 5-minute chart, has kind of changed a little bit in the last few minutes. So what I want to think about doing here in this particular case is the possibility of taking advantage of some of that initial strength. We're going to rotate back to this because this has changed a little bit since I was starting to kind of put things together here. So I'm going to pop over here to /MHG. This is the copper market, and this is the micro copper futures. You happen to notice this was off to the races this morning. So let's put this trade together, and then we'll come back and we'll kind of get a sense of what is going on kind of around the futures market and around the globe. taking a look at kind of the pattern that's playing itself out here. And the left-hand side is the longer-term chart. This is the one-year daily chart. And looking like a little bit of a bull flag type of bounce here. The potential for a move maybe back up to this 5.96 mark as a previous high. If we were looking at this as maybe a longer-term trade, kind of taking that kind of step back out and we say, look, this is the possibility of, with this creating a slightly higher low here on this right-hand side, the possibility of continuation of this trend. Some traders, on the other hand, may be looking at this as that potential for this to become a possible double top. You know, we've got housing starts information, we've got housing permits information, we've got housing prices information coming out this week. All of those things are probably likely to have an influence on the copper market, because that is one of certainly the areas of demand, as well as trade deals. We've got the August 1st tariff deadline coming up on Friday. That is likely to have an impact here in the futures market as well, especially in those areas that have seen. In Brazil, one of those areas where we currently do not have a deal. We do have a little bit of a trade surplus with Brazil as opposed to a trade deficit. But Brazilian trade deals, I mean, Brazil is one of the larger exporters, as is Chile, larger exporters of copper. So imports coming to the U.S. from Brazil up to 50% tariff, potentially, at least at the moment. That's not in place yet necessarily. Now, the question is, will there be a carve out for things like copper? So that's the question. So I'm going to come over here to the right-hand side. I can start to see in terms of the morning move here. This is our 5-day, 5-minute chart, starting to see that move to the upside. We've got that resistance level up here. I'm going to call it 6 for rounding purposes in terms of that move. So I'm going to open up this right-hand side chart a little larger. And I'm going to say, look, maybe we get this continuation of a bounce. This candle initially is kind of pulling back, but it's got some strong momentum. We've got a support level here at about the 5.63 mark. And we've got another support level down here at about the 5.6 mark. If I were to squish this down, you can kind of see where that 6 line is. It's right up there. So we've got a ways to go in terms of that potential move. So the way that I'm going to put this particular trade together is looking for that 6 mark to be the target in kind of the short to intermediate term time frame. Looking for the trigger of the trade to come on a break above the high of this last candle here, kind of as a breakout methodology, and then looking for the exit out of the trade if it's going against us being the break back down below this support level that we've seen. And there are a couple of points that we could choose. I realistically thinking choosing this 5.60 level, simply because that's kind of the range that this has been winding itself up in. Kind of gets concatenated with that compression that we've done to bring that range in here. But if I move this back to auto, you can kind of see where that is. There's that 5.60 level of support, 5.069, in fact, in this particular case. So I'm going to set the trade up this way. This is going to be our trigger in terms of getting into the trade. But from that perspective, from an illustrative and educational purpose and reason, the reasoning behind holding that trigger off, holding that entry off until above that high is simply for confirmation of the move outside of this short-term range. Because realistically, this candle, this previous candle that we saw there, becomes kind of that long-legged, meaning long shadows or wicks, top and bottom, kind of long-legged range in a bullish engulfing candle that kind of engulfs that candle right there, that little doji candle. So if we can see some momentum in this particular case above that range and that potential breakout, it doesn't by any means guarantee upward movement, but it gives perhaps some technically based confidence to the breakout that we're seeing out of this range, this little bit of a bounce. And it very well may be that we don't even get there. So that's kind of why it is a conditional trigger in this particular case. So rather than talking through the trade, let's kind of put this together. I'm going to right click right here. We're going to create a buy custom with OCO bracket, which means that we're going long this futures contract. We're going to get out if it goes up. We're going to get out if it goes down against us, but only after our initial entry order triggers. So this is going to be a buy stop in this particular case. Now, if we were to set it as a buy stop market, which is what happens by default when we change this order to a buy stop, because we're basically waiting. We're saying stop, wait, don't buy this contract until it gets to that price or better, then get into the trade. But then it submits a market order. Remember, market order, whether it's a buy stop order or a sell stop order, doesn't matter. That market order gets worked as an exchange designated limit order within those protection points. So we could, in fact, make this our own limit order if we wanted to. I'm going to let the exchange do it in this particular case. So there is the potential that this order does not get filled at all if we were to put it in with our buy stop being up here at 5.67. I'm going to call it 5.673, which would be the breakout above that resistance level, 5.673. And we're going to just leave that as a day order, because if this doesn't fill in today's trading, then we don't necessarily want to kind of stick with the premise. We want to be able to reevaluate. Then our target, we said, was going to be up at that 6. We made it 6 even. Now, 6.00, you don't have to be at 6 point even. I'm just kind of rounding in this particular case. And, this is a limit order. So that limit order is going to be treated a little bit differently. It's not going to be that necessarily that market order exchange designated limit order perspective, because we're simply saying sell it at this price or better at $6 or 6.00 or better. So the only way that that gets filled is if the price of this futures contract is at that price or better. Otherwise, that order will not fill. So we're already designating, and if it were to sell higher than that, that's fine. Nothing wrong with that, selling at a higher price, because that's the direction that we want to go here in this particular case. I'm going to make that good till cancel, which means that I also have to make my stop order good till canceled to match my time frame, so that if this does go against me. So where I'm going to place that stop order is if this goes to 5.6085. So we're going to put that here in this particular case. 5.6085 is the move to the downside. And again, if this is a stop market order, then that's going to be worked as an exchange designated limit order. And there is the potential, you got to remember, that in a fast moving market, and to be fair, copper has not been fast recently, at least for looking at this 5-day 5-minute chart or this today 5-minute chart, but it can be a fast moving market. There is the potential that that order would not get filled if the price of the contract traded through the protection range in which the exchange was working that order. There is the potential that that order would not fill. So just be aware of that as you're placing trades, especially in fast-moving futures markets. This is a bit sedate at the moment, so you just have to kind of be aware that it can be fast. And just maybe an assumption might be to assume that every market could potentially, based on news, be a fast-moving market. And so just be ready and aware that there's an order that could not or may not be taken off if you're using that as an exchange designated limit order. So, and again, the reasoning behind that is for the trader's protection, right? So the symbol here is /MHG. The big contract is /HG. And this is the micro contract. So what we're going to do is I'm going to put this order out here. Again, remember our trigger to get into the trade is right here at 5.6743. So we're going to go ahead and click on confirm and send, read through this order, make sure that this is what we want to have accomplish. Our buying power impact is 1,210. That tells us right there what our initial margin is in this particular trade. I'm going to put this in our futures group, and we're going to click on send, and we're going to fire that order off. And now that order is sitting there as a waiting order. If we go to the gear icon up here and we click on show orders on the general tab and click on apply and OK, now we're going to see where those orders are. So here's our order to exit. Here's our order to get into the trade. And then way up there, if we squish this back down, way up there, you're going to see our order to exit the trade right there at 6. So that's kind of how the trade lines out from a risk to reward perspective visually. And I kind of like that perspective of seeing that visual risk to reward relationship here. Now, if you've got a lot of trades on a particular symbol and you're showing trades and you're showing orders, it becomes a little bit cluttered. And so you can take that off by clicking on the gear icon, and you can click show orders and turn that off. If you wanted to turn the trades on, if you've got positions on already, you can click on show trades, and you can show that trade on the chart, or those trades that you might have. So Bob says, okay, if the market won't fill a market stop order, what do you do to exit the position? You adjust. One of the ways that you could accomplish that would be to adjust the order or click on flatten, but then it's going to execute a market order. And the thing about it is, if you get a fast moving market where, say, for instance, an exchange designated limit order, because that protection range, if that market kind of contracts back within that range, if it stops moving in a fast fashion, then you potentially could exit the trade. In some cases, if that market does move far enough to go beyond that exchange designated limit order, then there is the possibility that futures market goes lock limit, and there's the possibility that an exit order couldn't be sent unless the market starts to move in the opposite direction, right? And it unlocks. Sometimes those circuit breakers are timed. In fact, there are circuit breakers that are time-based. There are some circuit breakers that are movement-based. So in that event, it may be a circumstance where you simply have to wait through that and then look at working your way out of the position. Because if the circuit breakers go off in a fast-moving market, then nobody's trading. It basically becomes essentially a trading halt while that circuit breaker times out or moves out. And then that order can be placed or moved around again and adjusted. So again, there's a reason why we say at the very, very beginning of this discussion that there is the potential to lose money trading futures. In fact, more than the initial investment. And it is not suitable for all investors. So just be aware of some of those characteristics in terms of that relationship. I want to pop back over here really quickly to the longer term chart that we have as the other panel in our futures movers grid. And I just wanted to talk about the circumstances and characteristics of this particular contract. This is the micro contract, which means that in this particular case, our notional value is only $14,087. But what that means is, our tick size, the significant digit, is 0.0005. So that's this one right here that I'm pointing to. So 5.6350, that zero on the end, that trailing digit, that is our significant digit. That's our tick size, and it moves in an increment of 5. So it's going to move from 0 to 5. It's not going to go from 0 to 1 to 2 to 3. So you'll see this move from 7.0 to 7.5, or from 7.0 to 6.5 in those two significant digits. That's the tick size. And when that tick moves, that's $1.25, 1.25. Now that means that the point value, if you were to calculate this up, if this moves from 5 to 6, that's a $2,500 move in the contract price And that's what gets us to this notional value. Point value times the current trading price gets us to the notional value of the contract. So if we pop back over here, let's see where we are. And it's still kind of middling and waffling along. So we haven't entered the trade yet. So let's do this. Let's see what's going on. Let's see what's moving in the market. I'm going to come back over here. I'm logged into Schwab.com and I'm on the trade tab in Schwab.com and then market overview for futures. So I went to trade and then I went to futures and then I went to the market overview. And now I'm looking at the heat map view. And so I can kind of see what's going on. So here's our Bob gasoline. That was moving a little bit earlier. Here's copper futures. That was moving a little bit more earlier. The little green line or red line on the left-hand side of each one of these boxes denotes, much as any other heat map, denotes amount of or magnitude of movement. So the brighter green it is, the more it's moving. The brighter red it is, the more it's moving in the opposite direction. We see that wheat futures, in this particular case, seeing a move to the downside. Natural gas futures, RBOB gasoline moving up, both of those. Crude oil up a little bit. And if we take a look at, say, for instance, some of the other metals, gold kind of neutral, silver kind of neutral, palladium down, platinum down, bond futures up a little bit. So kind of a neutral morning here, not a lot going on other than perhaps in the energy space, a little bit more positive movement in the energy space. So let's pop back over to the thinkorswim platform. Let's take this grid back to its side-by-side view, and let's take a look at /MCL, which is the crude oil contract. And let's see what's going on here this morning with crude oil. Now, this is the micro crude oil contract. Again, notional value significantly lower, initial margin significantly lower than the large crude contract. And starting to see this little bit of a, if we look over here on the right-hand side, a little bit of a bullish engulfing candle kind of across this range here. So what we might do, and kind of breaking out of that resistance level. So the possibility here of going long crude in the /MCL, with that being kind of our threshold line, and seeing where that next level of resistance might be up here around 68. If we were to draw a line across there, that's about where 68 is. And so we can kind of see where that resistance level is up here. Same kind of layout as that, that chart that we were seeing previously when we were looking at copper. All right, so let's do this really quick. Let's put this trade together, and we're starting to see a little bit of falling momentum, but it is still holding up above the zero line, not yet breaking out. So we kind of have that threshold to break out of. Let's maximize this really quick. So notional value in this particular contract, $6,740. You can see that the significant digit is the zero here. It moves in 0.01 increments. So this is going to go from 40 to 39 or 41 as its increment. Each time that ticks, that's $1. Each point move here, so 6.7 to 6.8 is going to be $100 in the contract. So let's move over to our larger chart here. We're going to place our buy stop here at, let's zoom in a little bit more. We kind of got this concatenated. So we're going to place our buy stop here at 67.43 or 44. So we're going to right click, buy custom with OCO bracket 67.44. We're going to make that a buy stop, and we're going to make our trigger to get out. Let's drop this back down and just see where that was. That was, we'll call it 68.95. So we'll bring this back up. So we'll say 68.95 on our trigger to get out. We're going to make that good till canceled. And our exit is if this goes to 67.07. So back down just a little bit below that level of support, 67.07. And we're going to make that one good till canceled so that we have matching times in force. And we're going to just make sure that this is what we want it to do. Click on confirm and send, read through the order, make sure that we're aware of that. You can see your initial margin impact here is $608 for this micro contract. We'll take a look at what the difference would be in the larger contract here in just a second. But there's our setup with the potential trade on that breakout, and we don't have that breakout yet. The trigger has not been pulled yet at this point, but remember, these are going to be worked. That buy stop is going to be worked as an exchange designated limit order, so there is the potential for this to move higher. So let's pop back over here real quick. So a couple of quick questions about this page right here. So I went to Schwab.com is the first place that I went. Logged into my Schwab.com account. I went to the trade tab. And on the trade tab, then I went to futures. Now, I can't trade futures on the Schwab.com site, but because it'll give me this reminder, futures trading is accessible on the thinkorswim trading platform. But it does give me some market research tools, including this market overview. So if I click on market overview, I can click on the market overview. Now I get this box view, kind of this heat map view of the major futures contracts. And I can see that heat map view. Now this is current, right? And you're going to see the current time right here, but this is a snapshot, right? This is a snapshot. Now it looks like our entry, sounds like in my ear, our entry just filled. I'm just going to pop back over here to our /MCL. Our entry price just filled on this trade, and we go over here to the monitor tab, and there is our trade in place, starting to move in our favor here, at least at this point. And we'll see how that works. Our /MHG trade is still waiting, has not triggered yet. You can still see that that is a waiting order. It still has buy, sell there. And if we go to our working orders, we can kind of see what is going on. So last week, let's pop over here to our charts, and I want to pop into our futures grid and just kind of get a sense of what is going on kind of around the futures market here this morning. Now that we've got a couple of trades, illustrative examples under our belt here. Again, remember, those are not recommendations in any way. Those are simply illustrative examples of how a trader might take advantage of early movement here in the market as the cash market starts to get up and running. Now, those trades also, depending on when there is greater activity in some of those futures contracts, because futures contracts don't trade in the same time frame as equities. They still trade, but there may be activity outside of those ranges, and that's why some traders use futures contracts as trading tools outside the range of the cash market where equities trade. And equities are starting to trade outside of that market too, that typical time frame. But taking a look at what's going on here in the Russell 2000, one that we thought was going to perhaps reverse a little bit. We saw that bearish divergence on the RSI, but it is kind of still holding in there. And again, maybe in anticipation of the Fed meeting coming up tomorrow. In fact, there is kind of that wait and see mode here in small caps, likely because they potentially could see the biggest impact from any rate change coming out of the Fed meeting. Take a look at the /ES. This is the S&P 500. And we see that the ES continuing to move higher. We had that little bit of a bearish divergence. Now seeing the RSI moving a little bit higher here and continuing to see that possible little bit of a kind of almost bull flag bounce here. We get these little rallies up and pull back, rally up, pull back, and it's just kind of grinding its way higher here. The other thing I happen to notice, though, in terms of movement, is the range of these candles over the course of the last month or two has become much, much, much smaller. We don't see a lot of big range days. We see one or two. You see a big range day here last week. We see a big range day here Maybe a week prior to that, you see big range day back here in June, but not seeing, enormous moves. You're seeing a lot of these very small spinning top type candles. You take a look at the NASDAQ, on the other hand, and this is where we have maybe seen a little bit more movement afoot, and in fact, leading today perhaps to the upside, up now on the day 0.42%, so almost 0.5% to the upside in the NASDAQ tech-heavy space within this particular range. So starting to see that in terms of that move. Okay, so cool. I just want to make sure checking the messages here, the questions here in the comment section. So the other area that I wanted to take a look at, and I want to pop back out here to a different grid. I want to pop over here to our single grid. And this single grid is simply, for me, kind of a sandbox to play in. And one of the things that we've been looking at in the last couple of weeks are the cryptocurrency futures, and one of the ways in which to take advantage of movement within the crypto space, as opposed to trading, say, for instance, spot crypto through some kind of wallet or some other exchange. Eventually, there will potentially be that availability of trading spot crypto locally. But one of the ways outside of trading a crypto ETF would be through the use of crypto futures. Now, crypto futures is kind of an interesting animal because futures contracts have always been a method to trade from a speculative standpoint, to trade price movement of a particular commodity or product or instrument without having to actually own or necessarily take delivery of that particular instrument. So trading spot currency has an assumption, or trading spot currency or trading spot crypto, virtual currency, has the assumption that there is going to be actual possession of and possible warehousing of said currency or virtual currency. You get delivered Bitcoin and it sits in a coin wallet or something like that, right? But trading the futures contract and trading the movement of the futures contract against the movement of the virtual currency or the currency allows for speculation outside of ex parte owning the product itself, right? So much like we would trade a crude oil futures contract, but never expect or never plan or not have the ability to take physical delivery of crude oil. In this particular case, we might take a look at /BTC, which is the Bitcoin futures contract. And this is the large contract. And we're going to take a look at the notional value here really quickly. So the tick size is 5. So that's this digit right here. And that moves again in 0.5 increments, or I'm sorry, not 0.5 increments, in 5 increments. So that's going to go 5 to 0, 5 to 0, or 0 to 5. And you see how it moved from 5 to a 0. Every time that ticks, every time that changes from a 5 to a 0, that is a plus or minus gain or loss in the contract value of $25, which means that a point value in this particular case is $5. The notional value in this contract, $597,125. That is a fairly large notional value for this contract. If we come down here, we click on the drop-down box and we go to futures and we go to that Bitcoin futures, you see that the initial margin into one Bitcoin futures contract is $157,000, right? That is a pretty significant initial margin into this trade. So this becomes, maybe more of an institutional product, maybe a hedging product if you are say, for instance, a Bitcoin miner or something, and that hedge maybe makes sense. But there's also /MBT, which is the micro Bitcoin futures. And now we're talking about tick size again. We see that same tick size, tick value is 0.50, point value is 10 cents, and the notional value of this contract is a tenth of the large contract, so 11,932. If we click right here and we go to micro Bitcoin futures, our initial margin is 3,146 and not not $157,000 in terms of that notional or that initial margin. Makes it perhaps a little bit more accessible. Again, there be dragons here, right? I mean, again, the caution that I mentioned in the disclosure is there for a reason. From a derivative standpoint, I mean, it's tangible. I mean, a barrel of oil is tangible. An index, to a certain extent, is a tangible instrument. You can't hold it, but you can measure it. Bitcoin, on the other hand, virtual currencies, on the other hand, have some challenges when it comes to that tangible nature and understanding of that tangible nature. Now, I know there are going to be crypto advocates and proponents that are going to argue against that side of the discussion, but from that standpoint, it is something to be aware of. It is something to pay attention to in terms of the possible risks, in terms of the fact that this is not legal tender, that there is the possibility that something could happen, news could happen. And I guess that exists all over the time, right? But let's take a look at /MET, which is the micro ether. Ethereum is one of the other competing cryptocurrencies, and this is what's sometimes referred to as a stable coin. I would argue that, Josh, you're right. Everything has risk. I just want to make sure that we're, on board with understanding the potential risk here. Now, the cool thing about this is because of the size difference in terms of the price of the coin, this has a little bit smaller notional value. Even in the larger contract, if we did /ETH, you see that the notional value here is 191,000, not 500,000 like in the Bitcoin contract. And the initial margin for an ETH contract is 67,000. But if we go to /MET, the micro ether futures, and we look at that notional value and that initial margin, it's $132. So significantly less, significantly lower barrier to entry. Now, not that is okay. So I'm going to say this the right way. And Mindy, if you're listening, this is kind of the perspective. It is a lower barrier to entry simply from that initial margin cost. Don't let that deceive you into thinking that there is less exogenous risk to this contract just because the notional value and the initial margin is less. Money still could be lost. Moves still could happen. That risk is just notionally less in terms of putting on a micro ether futures. But the exogenous risk, the things that could move this market are still there. It should not induce you or a trader to trade if they're not comfortable with that level of risk or with the potential for movement here. So I'm going to pop really quick before we're done here. I know we've got just a couple of minutes to go. I'm going to pop back to our future movers grid, and I'm going to come back over here to /MET and kind of see it move in the opposite direction here. We faded this, I think, once before in terms of that move to the downside, kind of selling off of that range here. And I'm going to do the same thing given that it's broken down below this level right here, broken down below that support level, potentially looking for it to make a move down to this 3767 level. So that's going to be this kind of short-term fade target, fading this upward move. So we get some pretty good momentum to the downside, and we're going to take the trade off in this particular case if it goes back up above this 38.76 level. So we're going to do this. We're going to come down here. We're going to right click, and we're going to create an order, sell custom with OCO bracket. So the OSO bracket's going to be a buy order to take this trade off. And the way that we're going to put this on is we're going to get into the trade now. The price of the contract right now is 38.34. So we're going to be okay if we can sell it at 38.38 or better. We're going to probably move that around a little bit here. So let's see if we can do that. I want to get in if this goes to 38, if this is at 38.36. I'm going to give it a little bit of room. I want to get into the trade because it's made the break below here. So I'm going to say 38.35 or lower, and we're going to get into that. That's a limit order. So if it goes back up, then we're not going to get into that. Or I'm sorry, if it goes down, we're not going to get into it. And then we're going to get out. If it goes down, we're going to buy it back at a limit order. So this is going to be a little bit opposite what we did before, right? We're going to say buy it back at this price or better. And or better is lower. So we're going to say 38.37. We're going to be looking for this to make that move to the downside. And so we're going to say buy it back if we can get to 37. We'll say 37.65. 37.65. So we'll make that 37.65. Oops, 37.65 even. We'll buy that back. We'll make that good till canceled. And we'll buy it back on a buy stop if it goes to 38.76. 38.76. So that's going the opposite direction. 38.76 going opposite our direction. And we'll make that one good till canceled so that those match. So we've got an order to take it off if it goes up against us. We've got an order to take it off if it goes down in our favor. And remember, that one's going to be a limit order, one's going to be a stop market order, which is going to get worked. And let's click on confirm and send, read through this order, make sure that we're aware of that. We'll put it in our futures group, transaction costs that we're aware of, and we're going to click on send. And that order should theoretically fill for us. And it did at 38.40. And so now we are short that contract, looking at making that move to the downside, although it is starting to go, as it often does, against us right here off of the bottom of that candle. So we're looking for downward movement. If it doesn't, we've got an order to take it off, and we've got an order to take it off if it goes in our direction. So that's what we've done today in putting this trade on. If you want to learn a little bit more, again, that futures location on schwab.com, but you can always come over here to the Trader Talks webcast page. By the way, click on subscribe and like if you haven't done so already. If you come over here to the Trader Talks webcast and you see that this says subscribe, click right there to follow us. And then in our, you can come over here to Schwab Coaching and see our full calendar of resources. And so let's go back really quick because I just heard one more trade go off in this case. And so let's see what just filled for us. So our copper order just filled. So we're in copper. We're in that micro crude oil contract, and we were in that micro ether contract. So all three of those orders that illustrative examples that we put on today have now started moving in our at least so far in our favor, at least far enough in our favor that they triggered the orders to get in. So we'll see how that works. We'll take a look at those when we come back next Tuesday. And I will be here next Tuesday as well. So once again, my thanks to Michael Fairborn for helping out. My thanks to our great production staff, and of course to all of you for being here, and our great reviewers, Mindy and Nikki, and everybody else that helps out to bring these webcasts to you. Thanks, guys. Have a great day, and we will see you again next Tuesday for Trading Futures. Take care, everybody. Bye-bye.